Hi, my name is Drew, and if we haven't met before, welcome to ReadyBudgetGo. If this isn't your first visit, welcome back. Either way, I'm glad you're here. This is My Money Relaunch, a series where I talk about things I have learned as I dug myself out of debt for the second time and started gaining control over my finances. Before we go into today's topic, there's a couple points I need to cover. First, I'm not a financial advisor. This series is for informational and entertainment purposes only. Before making any moves with your money, do your own research and seek your own counsel. Second, while I'm talking, I'll be putting down stickers in this paint by sticker book. For each sticker I place, I will save $5 toward one of my big goals. This week's target is 50 stickers for $250 in savings. Now that my emergency fund is fully funded, for this week and the next several weeks, I will continue stockpiling money toward the big move, which funds my relocation across the country this spring. This week, I want to talk about insurance, and specifically what I call retail insurance. I'm not sure if that's an industry term or not, but this is what I've started referring to for policies that cover stuff, as opposed to our major purchases that are often insured: our house, our car, our business, things like that. When I'm talking about retail insurance, I'm talking about policies that are usually sold to us as an add-on, often, but not always, when making an expensive purchase. So things like a laptop computer or any computer, a cell phone, maybe an expensive camera, a piece of jewelry, anything like that, a trip, travel, hotels, airfare, things like that, where it's part of the purchase process. You are presented with the option to quote unquote protect your investment, if you want to call it that, or the purchase price of whatever it is that you're buying. And what I noticed recently, and it's not quite as bad as it used to be, but there was a time when insurance policies were pushed on pretty small purchases. This used to be something that you would find especially on Amazon, and I've seen this option at Macy's. And we're talking about for things that cost less than $50. So the insurance policy is relatively inexpensive, maybe a couple of dollars, but as a percentage of the purchase price and in aggregate, when you consider how much of these things you're buying, it can really add up. There was a comedian named John Pinette. He is deceased now. He's been deceased for a while. But he had, as part of one of his comedy routines, where he went to a store to buy a toaster, and they kept pushing him for, did he want the insurance policy? And he said, no, I think I'm going to absorb the risk on this one. So if you're presented with those options, consider, as part of your evaluation process, whether the loss of an item would constitute a big enough loss in your life to justify taking out the insurance policy. Because remember, if you have a claim on one of these micro policies, you still have to fill out paperwork, you have to keep all the documentation. So to cover a $30 or $40 loss probably isn't worth the time it would take just to fill out the paperwork if ever you did have a claim. So again, often we see these policies being pushed or being offered when if you were forced to do without it, it would cause a significant sense of loss. So for example, you buy a piece of jewelry, perhaps it's an engagement ring or something that has your children's names on it, or something that you have saved up for a really long time, a really expensive tennis bracelet or a pendant or whatever it may be, and suddenly you no longer have that item because it breaks or it gets lost or it gets stolen or whatever the case may be. It turns out to be a fake. That will give you a sense of loss, and the insurance is meant to make you whole from that loss. It's preying on your emotions. The insurance company is preying on your emotions, because if you insure something like an heirloom or a honeymoon trip, it will make you whole with the money you spent, but it won't actually replace the true value of that item, which you really can't put a price on. For example, if you insure a piece of heirloom jewelry and it gets lost, stolen, whatever the case may be that results in a claim, the insurance company will give you what the money that it would cost to replace it, or whatever your insurance policy allows. And let's say you replace it with the quote unquote exact same thing, but it won't be the cameo brooch that belonged to your grandmother, or the player piano that has been in your family for 6 generations, or whatever the case may be. It's not going to be that exact item, even if it is an exact replica. It doesn't have the provenance that the original item did. Similarly, let's say we're talking about the honeymoon here. Now, you have to cancel your honeymoon for whatever reason, and you have the insurance, and the insurance pays you out, assuming that, all goes according to plan with the insurance, and I'll talk more about that in a minute. It's not going to, that money that you get back doesn't give you the time back. It doesn't mean that you go from the chapel to the honeymoon, because that time has passed. It won't bring that back. It only makes you whole in a monetary sense. And sometimes that can feel even more empty, right? So you lose this item that means so much to you, but you get this amount of money that is nowhere near what you would be willing to spend, let's say hypothetically, to replace the sense of loss. And that money starts to feel dirty, or you don't want it. You want the item back so badly, and the insurance ends up not being worth it. So that's another consideration. Make sure, if you do buy one of the insurance policies, that you know what you're getting. Be sure that you understand the covered perils, loss, theft, damage, and how it becomes damaged. For example, it may not be covered if it's damaged in a fire, but it might be covered if it's damaged in an earthquake, a tornado, if you accidentally step on it. Be sure that you understand the policy exactly. And don't assume that just because you bought a policy that you're covered against all potential perils, because almost no insurance policy can anticipate any sense of loss. And those that will cover all perils, are typically extremely expensive, probably about as much as the item costs, or close to it. So, for example, if you insure your Hawaiian holiday and it ends up being canceled because a volcano erupts, you may not be covered. If you lose your wedding ring and you don't have a receipt, even though you have insurance, you can't prove how much you spent on it, you can't prove the weight of the stones or anything like that, your goose is cooked. Your insurance policy isn't going to pay you if they can't determine the actual monetary loss that you incurred. Insurance companies love writing these policies because they're highly profitable, and the contracts are filled with gotchas, documentation requirements, time frame requirements, policy exclusions, limited coverage, the list goes on and on. Here's another thing. You may be purchasing duplicate coverage and not even know it. It may sound reassuring for highly valuable assets, but it could be a waste of money and may even set up a showdown between insurance companies if you have a claim, as both may try to foist responsibility on the other. So, for example, if you have, let's say, a laptop computer, and you buy the insurance policy when you purchase the computer, but you're also covered through some other policy that will apply under certain circumstances, whether that's your auto insurance policy, your homeowner's policy, your renter's policy, your credit card, whatever it is. If you end up having a claim, depending on where the loss occurred, you may end up finding yourself in the middle of a battle while the insurance companies duke it out, and meanwhile, you're having to come up with the money to replace that computer and wait for reimbursement later. So don't think that just because you're buying insurance, if you have a loss, if you file a claim, that you're going to get the money back lickety-split, especially if you have this double coverage. Cell phone and rental cars are both great examples of this. Your credit card may already protect you. Always keep a hard copy of your credit card agreement in a safe place if it has any kind of insurance, whether that is for, again, rental cars, cell phones, travel that's booked with that credit card. Understand what your card agreement says and know what you're covered for, what the limits are, and then decide if you need to purchase additional coverage for other potential perils or other amounts in excess of what your card will cover. As I was saying before, your homeowner's or your renter's insurance policy may also cover you in the event of a loss. Make sure you understand the limits and perils, and purchase a rider with additional coverage if necessary. A rider is an addendum or an attachment to a written policy that will insure a specific thing or specific group of things against a specific peril. They tend to be very exact, and it will cost you additional money. But if you feel you have a high probability or better than even probability of loss from a given peril, then it can be worth the money. You may also want to purchase additional coverage if it's for something that you frequently take out of the house with you. So, for example, if your wedding ring, let's just say, gets lost in a house fire, or your house falls down, or there's a tornado, or whatever it is, your homeowner's policy may cover you because it happened in your home. But if you are out and about on the town, you go to the gym, let's say, you take off your wedding band to work out, and when you come back to the locker room, someone's broken into your locker and stolen your jewelry, your homeowner's policy isn't going to cover that. So if that's something that you feel like has a decent chance of happening and you want protection against that, then go ahead and purchase the additional policy. Just bear in mind that you always understand whenever you purchase an insurance policy what you're being covered for, where the loss has to occur in order for coverage to kick in, and what the coverage limits are. If you buy a $5,000 piece of jewelry and your insurance covers up to $1,000, that extra $4,000 is on you. So having that in mind and purchasing a rider or an additional policy, additional coverage if needed, is indicated. Okay, so that is it for this week. It was kind of a very small focus on one specific area of insurance, but it was something that I was thinking about recently because I just purchased trip insurance for one of my flights for an upcoming trip, and I thought it was worth mentioning because for me, I thought it was worth it to purchase the trip, or purchase the insurance rather. And as soon as I did, I thought, I bet my credit card is going to cover this if there's a trip interruption. But I already purchased the policy, so I'm going to eat that $33 as part of my trip cost. But it's something that I'm going to be mindful of in the future, and it's something that you should be mindful of as well. I am insured to the hilt. I buy insurance for pretty much anything that I think has a decent chance of happening to me because I want to be protected. But I also don't want to be wasting money on policies that either cover me double or that don't serve the need that I have to protect against loss. All right, so next week I want to talk about taxes, as it's going to be that time of year again. For now, if you enjoyed this episode of My Money Relaunch, please be sure to give it a thumbs up, leave a comment down below, subscribe if you haven't already, and until I see you in the next one, take care.